Hi, welcome back. In this video, we're going to do a quick 5-minute stock analysis video on Genting Singapore, the operator of Resorts World Sentosa, one of the largest integrated resorts in Asia. We'll cover the company profile, financial performance, insider ownership, and what to watch out for the stock. First off, RWS comprises of various attractions in itself, such as Sea Aquarium, Adventure Cove Water Park, Universal Studios Singapore Theme Park, hotels, MICE venues, restaurants, and more. And due to the duopoly structure in Singapore, Genting Singapore's casino effectively competes against only MBS. This means that although competition is relatively less intense compared to the other markets, it depends heavily on the tourism market because many of the high rollers actually come from China and other countries. And before we move on to the financial side of things, do help us to like our video and subscribe to the channel for you to enjoy more interesting stock ideas and learn how to invest for the better. And not to forget our favorite financial meme. Now I will hop over to Simply Wall Street to look at the financial performance. Okay, and over here we can click on past performance. All right, and over here we can see the revenue and earnings history dialing all the way back to FY 2016. Okay, we can see that the revenue and earnings have been relatively stagnant from 2017 to 2020 until COVID happens, and it took a nosedive, all right, to 2021 and 2022, and subsequently it recovered just maybe in the past year or so. Okay, and if we were to turn on the free cash flow, okay, we can see that you also following the similar pattern as the earnings. Okay, and right now is already a 619 million free cash flow. Okay, and if you were to just go down to the financial health, okay, we can see that they already have zero debt at the moment, and they are sitting on a huge cash pile of 3.47 billion. Okay, so this is a very rock solid balance sheet to have. Okay, next, let's look at their management team and the ownership. Okay, for the management team itself, we can see that, okay, investors can actually take comfort that the CEO, okay, Mr. He Teck Tan, right? He has been appointed the CEO just last year, okay? And he's a veteran in the firm, having been CEO of the RWS since 2007 and has been responsible for the successful bidding of the integrated resort back in 2006, okay? And let's look at the ownership. Okay, we can see that it's majority owned by Genting Berhad, okay, 52.63%. And this in turn is also owned largely by the executive chairman too. So this is like a very family owned business. All right, next up, let's look at the analyst target price. We'll just go for the future growth. Okay, all right, so over here we can see that after the share price has increased sharply from around 81 cents to $1.09. Okay, Genting Singapore is now trading at quite a high price level as compared to the past 2 years or so. So right now there are 18 analysts covering the stock, and their target price is only around 2.5%, okay, higher than their current share price. So we can say that there's not much potential upside at the moment. Okay, so what else to watch out for, right, is that the Genting Singapore RWS 2.0 expansion is going well at the moment, and we can look forward to new developments on land, remaking of the festive hotel, and also upgrading of the convention center. So there will be new growth developments going forward. To end off, if you want me to cover any other blue chip stock, okay, whether Singapore or US stock, do let me know in the comments down below. Next up, check out this video for 5 defensive Singapore stocks with at least 4% dividend yields. I will see you next time. Thanks for watching and ciao.